There was once a dream that we would have regulators who were leading agencies of the likes of Jonathan McKernan and Travis Hill and Jonathan Gould. And the idea that we can get even one of them would have literally probably made our day and filled this room. The idea that we have three dynamic regulators who understand what we're doing, who have been in the thick of it for so many years, is truly remarkable. Again, not just for us as an industry, but I think for the entire country in terms of understanding and balancing innovation and financial regulation. I had the distinct opportunity and privilege of interviewing Comptroller Gould back in Utah, and I tell you, to this day, this year, it was one of the most watched videos that we've ever put up because of the take and approach he took was so fresh. Jonathan McKernan this morning said it's hard for him to get attention when you're going to be on the stage. And so I told him he could break news, but you know, it's always going to be difficult when you're around. So Comptroller Gould, thank you so much for everything that you're doing and for being here with us today. And of course, being expertly moderated by our very own Chief Policy Officer, Ian Moloney.
We are very happy to have you here. It has been a busy, busy time, and I think under your leadership, it's, you know, to say you've been active in this space and really focused is a bit of an understatement, but I think really to set the stage around this conversation, it would be good if you can discuss kind of your vision for how OCC can encourage responsible innovation in financial services and really make sure that the industry remains globally competitive.
Thank you very much for having me and for inviting me. It's a great pleasure to be here today. So as I think about kind of these issues, I think innovation is fundamentally linked to remaining relevant, and increasingly it's important for banks to remain innovative as they've always been over at least our 162-year history. We've seen innovations in the banking system repeatedly, but also that they embrace innovation to ensure that they have as many possible paths to kind of long-term relevance to their consumers and their markets, and as importantly, and from a safety and soundness perspective as well, to viability long term. So I think that's kind of critical, and that's a lot of how I look at it. I mean, the OCC, I think, has historically, with perhaps some deviations, generally pursued a kind of technology neutral approach, again, with some deviations. One of the things that I'm really focused on ensuring that we at the OCC have a bit of a mindset change where, when we think about new technologies or, potentially banks engaging in new forms of traditional financial intermediation activities, that we as supervisors are looking for ways to facilitate their engagement in those activities or embrace of new technology in a safe and sound manner. So, at times in the past, the OCC has been a little bit more reactive or has, kind of put the onus on the entity seeking to engage or use some technology and, basically said, hey, you all figure out how to do it in a safe and sound manner. I think we're trying to take a little different approach this time, working with, folks in this room and others to together find a path forward to do it in a safe and sound manner if it is a legally permissible activity. And then finally, one other thing I'm just also focused on is making sure that, some of these, again, new forms of financial intermediation or new technologies, that they are not going to wind up being the exclusive purview of just a few privileged entities, within the financial services system. We have, I think, at times seen scenarios develop in which, only the very kind of largest entities have the most sophisticated risk management or have the resource to invest or have the kind of huge balance sheets to absorb. And that just further kind of, I think, creates this two-tiered system, which at least I as a supervisor would like to try to avoid.
Yeah, that makes a lot of sense, and I can say, our membership consistently talks about how there is that difference in approach and that it is, this democratization, making sure that there's opportunities for large and small institutions or smaller institutions to engage effectively in innovation. And so, kind of keying in on that supervisory perspective, I think it's important to recognize that OCC really has shown a lot of leadership, a bit historically, and especially under your leadership, as it relates to that supervisory perspective. But with the OCC's recent changes around, its bank supervision structure, combined with a focus on encouraging responsible innovation, how is the OCC really, ensuring a pragmatic, well-informed oversight of bank fintech partnerships?
Well, I think first is just acknowledging right off the bat that it is important for banks to have the option of partnering with fintechs. That's not going to be relevant for all banks or for all business models, but the fact that that option exists and is important for some means it should be important for us as supervisors to find ways to facilitate it, okay? And so, again, we have, in all cases, not always kind of done that. In some cases, I think we've lost the thread, but it is really important that partnership models be able to exist. Banks need access to technology. Sometimes they can't do it on their own. Sometimes others are better equipped to produce it. They need access to third parties to facilitate kind of bank balance sheet management activities. So we need to, again, find ways to make that happen. And we haven't always, I think, done so. So the ways we're kind of working on is from three different angles. One is on just kind of the supervisory expectations. As you've seen, we in the FDIC, are really focused on kind of making sure our examiners are actually thinking about material financial risks and not getting lost, potentially in process-related concerns that really don't go to the core of our supervisory interest. So that's one, kind of refocusing on that. Another thing that we're focused on is just generally kind of the tailoring of our supervisory activities more generally, and we did that. You alluded to some of the kind of supervision groups that we created over the last few months. Again, focused on community banks or focused on regional and mid-size. So again, we're trying to tailor our supervision a little bit more effectively. I have some concerns about the third-party risk management guidance that we issued some years ago, and just how it's been executed by examiners. I've heard, and you probably have seen, some of the horror stories of, in certain cases, just kind of the real kind of minutia that at times our supervision teams might get lost in. We need to take a step back on that and figure out how we can revise it to make it a little bit better. More generally, I have a lot of friends who have spent many, many years, thinking about how banks can successfully partner with third parties. And, we do, the OCC and other federal banking agencies do deal with issues that are maybe not entirely, but are quite difficult, involve trade-offs, and maybe even are intractable. This is not one of them. I mean, we can approach these relationships in a common sense way and still achieve our supervisory objectives without utterly frustrating the economics and the practicality of a partnership arrangement. And then I guess the final thing I'd note is just more generally, I think we are kind of looking at how some of the workarounds that we have built, like fintech offices or chief innovation officers, how those have worked over time. I would just note that workarounds are meant to be short-term in nature because they reflect a problem with an underlying process or approach. And so I'm always very hesitant to see workarounds become permanent. We need to fix like the underlying issue, right? So if it's a mindset change, let's fix that. If it's a process change, let's fix that. Let's just not have perpetual workarounds. Yeah. They serve an important purpose, and I'm not saying we don't necessarily need them, but we got to fix the underlying problems too.
I think that makes perfect sense, and really, there's always this focus in the industry of, we focus on engagement with examiners, making sure that they have the proper information. I know our members do, quite heavily as well, and there's always this underlying consideration when you're thinking about third-party risk management of it. Is it, the build by partner sort of situation and thinking through that, and really nowhere is that kind of catching a lot of tailwinds or a lot of focus as much as in the AI right? No conversation would be complete without it. So I might as well, tick off the buzzword for if you're playing bingo at home. But as really we've heard from the last fireside chat with Dave Gerard that this is moving beyond machine learning. It's growing beyond just that traditional model to in the financial services space, looking at generative AI and even discussions around agentic AI. And so can you discuss kind of how OCC is looking at these developments?
Yeah, so this kind of goes back to, well, I guess first off, I think these are very exciting kind of developments for the banking system, financial service system, and beyond. We look at it from multiple respects. Obviously, we're interested in ways in which we can use AI in some way, shape, or form to do our job better. There's plenty of room for improvement on the agency management side in that regard. We try to learn from our banks. We see banks using it this way or that way. I'm encouraged kind of our examiners who see it being used by banks to figure out, okay, well, does that inspire us to use it in a certain way? One of the things I mentioned this earlier too. I just want to make sure that all the banks that are interested in kind of experimenting and trying to find ways they can use it to better serve their customers or markets, that they have the opportunity to do so. And I really don't want to see kind of a situation where we default into this kind of trap of, well, only the biggest banks can use AI. The AI perhaps different from some other technologies we've seen, and I'm not sure we do AI justice by calling it a model or a mere technology that might kind of understate it, at least as I understand it. But it has the potential to have a leveling kind of impact across the financial services system, right? Right now you've got banks and they'll spend billions of dollars on tech, right? And they'll describe themselves. What are you talking about? We are fintechs, and some truth to that, I'm sure. But you've got smaller banks. They can't possibly hire hundreds of software coders. But if AI does half of what people suggest, you don't need to hire teams of software coders, right? You might be able to design your own tech stack. You might be able to rather than having to use one of the handful of kind of core systems providers, you can design your own. Yes, maybe AI gets you only 95% of the way there, and you still need to hire a software consultant to help you get the final kind of 5% there. But those are significant game changers, and that will, I think, give a lot of banks or financial institutions, including those of different size, including specifically smaller size and scale, a real opportunity to kind of chart their own destiny going forward. So I think I view it again as a really exciting advance. Again, there are downside risks. It's our job as a supervisor to be conservative and to focus on those downsides, try to mitigate them, and we want to make sure banks are managing whatever risks associated with that well. But let's not do that to the extent of failing to recognize the upside potential too.
Well, I think it's so smart to think of it. When we think of it as you've got AI is far from monolithic, right? And neither is financial services, and so there's this importance of understanding the risk profiles associated with a given technology and with a given use case. And so, it makes a lot of sense to really take that risk-based approach, and we've seen that, from the signaling as it relates to how, supervisory infrastructure and what's going on as it relates to reputation risk. And so, we've talked a bit about how OCC is seeing this, but, obviously, even in my own world, right? I'm thinking about how can I leverage this to do my job more effectively and, leverage different AI tools. And so I'd love to hear kind of more from a personal angle, how are you using AI and has it changed sort of the way you do work and also how you think about technology?
It's starting to change how I do work in terms of just basic research, things like that, right? Where it's the capability to synthesize kind of large amounts of information from disparate sources. That's extremely helpful just in my daily job. That's part of what I do. I'll probably be replaced soon by an AI because most of what I do, right, is to synthesize. People pour in lots of information. Most of it I forget after about 24 hours because my
there always has to be a human in the loop,
limited.
Right? Though, so you'll still be there.
So there's a little bit of that. But in terms of how I think about it, and this goes back to an earlier point, I want to make sure we're not defaulting into kind of our typical approach to viewing this as some kind of a model. We're in the process of kind of it made some changes already with respect to model risk management and how we think about that whole process. But if we default into our current status quo approach to models and model risk management and model governance and model validation, everything else around AI, we're going to kill it, right? Or we'll confine it just to the very largest banks within the system, because only they will be able to do the kind of the rigorous testing and everything else necessary to sustain it. So we got to come up with a different model. So that's my so far like relatively limited interaction with it suggests to me that we should not view it in this default category of just being a mere model or a new technology. We need to think about it more expansively.
That makes a lot of sense. And it is that forward-leaning approach, thinking it through and understanding the technology more than just kind of having that baseline fear and, oh, we can't do that. And so, another area that really has come to the fore pretty recently is around stablecoins. And you've got the passage of Genius Act, which recently signed into law, expands OCC's authority as to include non-bank payment stablecoin issuers. So OCC has been crucial not only in that part of the conversation, but also the broader part of regarding bank involvement within the digital asset space. So I'm wondering if you could discuss kind of under your leadership, how is the OCC working to ensure that innovative banks and non-banks are able to operate effectively in this space, in the digital asset space?
Right. So, I mean, as I mentioned at the outset of our conversation, we were discussing, banks, both state and federal, have a long history of innovating in this country and taking kind of the very old business of banking and adapting it over time. And so, we at the OCC are kind of approaching it from three different kind of angles. One is we want to kind of provide a regulated space in which these activities can be performed. We want to provide clarity around kind of the rules of the road, and we provide additional transparency as to what kind of our expectations are, both regulatory and supervisory. So on the kind of the providing a regulatory space perspective, my view is that essentially like whether you are kind of within or currently outside of the banking space and you want to engage in these activities, and if you meet our statutory factors, we're going to provide a space within which you can engage in these activities. That's just kind of general principles. Yep. On the clarity side, as you know, we've taken some steps specifically in the digital asset space. Actually, over the course of this year, including before I got there or got to the agency, we rescinded that, removed kind of the no supervisory objection process that had been created by Interpretive Letter 1179. We actually just today published a new Interpretive Letter 1186, clarifying that national banks can basically pay gas fees on digital asset, associated with digital asset transactions and issuance of stablecoin and so forth, and that they can hold those gas fees as principal. So that was implicit, obviously, in Interpretive Letter 1174, which said they could, be nodes and engage in the stablecoin network. And obviously, another aspect of that on the regulatory clarity side is the Genius Act regulations. We're kind of knee deep in drafting those regulations. A lot of times agencies put out proposals. They already know what they want to do. We're going to put out proposals for you all to take a look at. We very much welcome and need your input. So we don't have any preordained kind of. It's not a kind of rubber stamp process. We actually really will benefit from the formal comment process. So when we get that out there, we really encourage you all to take a look and let us know what we're missing, what we should be considering, how we can make it better. So that's on kind of the clarity side. And then transparency. So today, I guess in addition to being like kind of a McDonald's anniversary, it's a lesser known and less delectable anniversary. That is, it's the anniversary of 4 years from the issuance of Interpretive Letter 1179, which I mentioned before, would set the no supervisory objection process.
I think this room was paying more attention to the latter than the former.
Okay. So. Well, so in any event, that basically put up a framework around and essentially put the kibosh on engaging in digital asset activities that were legally permissible in the national banking system. So if you go on our website, in addition to seeing the new Interpreter Letter 1186 on gas fees, you will see, because I think transparency is important in reestablishing kind of confidence in what we're about, you will see all the requests that the agency got on Interpreter Letter 1179, redacted, of course, and you'll see our responses. You'll see the wait times. You'll see a story in which banks were coming and asking, could they engage in this or that activity? And you will see the months tick by and tick by and tick by, and you will see application withdrawn, request withdrawn, request withdrawn. So I thought it was important for the public to see what went on over the last few years. And I'll just tell you, we will be taking a very different approach going forward. We will endeavor, and I'm sure we will fall short, but we will not intentionally fall short. We will endeavor to provide clarity and give people who have questions answers in reasonable timeframes around legally permissible activities and how to engage in them in a safe and sound manner. So please feel free to take a look at that.
That's very much so. It's very much so worth the round of applause, because it's things that we care about. Transparency, making sure that the comment process is just that. It's open dialogue. It's the ability to actually shape the regulatory framework. And so we're very happy to hear that there's no sort of preordained conclusions. And as someone who writes a lot of comment letters, I personally am very happy to hear that it's not just screaming into.
Are you guys using AI to write comment letters? I have a friend who's
No. I'm fairly finicky about my writing, so.
But you can use AI basically to take all of the comment letters from, say, an organization. You can ensure that you're collecting all the different points and being consistent over time.
You can bring them together and build out the messaging, and so that is helpful, and that may or may not be a way that I'm engaging with AI. But yeah, I'm still way too finicky about my own style to let AI play that game. But that's super helpful, and I think we've had a really good conversation. I really, again, appreciate you being here. It is quite an honor for me. And thank you for sharing your perspectives on a number of different issues. So before we close, I just want to get some of your final thoughts on what you think the audience should be leaving with from this conversation.
Look, I mean, I just, we have not, again, in all cases, used the time and the opportunities we've had as supervisors to learn as much as we should have about changes in the banking system. We have at times, again, pursued, I think, a myopic kind of risk elimination strategy rather than thinking about the broader picture. I think it was a particular misstep for an agency that's 162 years old and by definition should take a pretty long-term view of risk management and the overall integrity of the banking system as part of a larger and dynamic financial service system. So we're open for business, I guess, is the message I would leave you. If you have thoughts on how we can improve our supervision, how we can improve a regulatory framework that's clear, that's transparent, please let us know. When we issue RFIs, you'll see some of those coming up, or proposals, whether it's the Genius Act or something else. We really do welcome your comments, again, formally or informally. We need that help. And just, I guess, more generally, we're excited to work with you all. And the folks you represent in this room or the folks you're affiliated with to try to find kind of safe and sound paths forward to allow innovation into the banking system as we've always done for decades and decades and decades in the past. We need to be open to it and we need to address it, and I think with your help we can do so. So thank you.
Absolutely, and I can say from experience, you and your staff have been open, ready to work with us, ready to speak to us, and so it's greatly appreciated. Again, thank you for taking the time today, and really appreciate it, Comptroller Gould.
Thank you, appreciate it. Thank you very much.